Now, we've been seeing a lot of reactions to Budget 2016 since Friday, and Alliance DBS is calling it people-friendly but market-neutral.
So we're now joined by none other than the head of research at Alliance DBS himself, Bernard Ching, for more. Bernard, thank you so much for joining us. So let's begin with this, your initial assessment of the measures announced in Budget 2016.
I think in some sense, the budget measures sort of fall within our expectations, given that the government's facing quite difficult fiscal constraint. So the capping of the operating expenditure in some ways helps towards continuing the government's commitments towards fiscal discipline, and that helps over the medium term.
So fiscal discipline was one aspect of it, but we also saw how a lot of infrastructure investment was going to continue. A lot of those big projects like the Pan-Borneo Highway, 27 billion ringgit. So on the back of that, what kind of momentum are you going to see for certain sectors? For example, construction stocks gaining today.
Yeah, well, the construction story has been going on for the last couple of years, and if you look at it there are really no major positive surprises, because a lot of the projects have really been mentioned in previous budgets. And I think the only positive out of that construction space is that governments continue to commit towards those mega infrastructure projects, and certain timelines right now become more apparent. And I think the market reactions today, just testament to that commitment by the government.
Yeah. So now, no positive surprises, but perhaps any other surprises that you noticed from Friday's announcement?
I think the negative surprises from the budget was that the increase in the income tax for high income earners. I don't think it's going to be very significant in boosting the government's coffers.
Yeah, 400 million ringgit thereabouts, according to Irwan Siraga.
No, yeah, but it may be sending the wrong message, because governments wanted to build Malaysia as a high income earners economy. Spend a lot of efforts in attracting the foreign talents to come back to Malaysia, and this may send the wrong message.
Yeah, so from that 400 million that they stand to garner, this on the government side, but then at the same time, I'm sure they have to also take into consideration the impact it would have on the private sector, because many of these top earners would be the ones who would be driving those growth in the private sector.
And businesses also face higher minimum wage costs starting next July. So looking at the bigger picture there, what's the impact?
I think if you look at the focus of the government spending in this budget is that they have focused on the bottom 40 household, which I think is the right thing to do, because this is the household that is likely to be most impacted negatively by the rising cost of living. All right. So there's been a lot of measures, tax reliefs, raising of the minimum wages, as well as the salary adjustments for government servants. All right. So that is likely to give a boost to domestic consumption. But having said that, in terms of impacts to corporate Malaysia, we think that it's going to be quite muted, because the rise in the domestic consumption is likely to be offset by rising costs of doing business. Right.
Now, some other things we noted as well was Vinapuri, for example, today getting a contract to build houses. There's going to be incentives for food manufacturers under the budget. So based on these kind of measures that are being taken, what are you liking? Who do you think will benefit from budget?
I think we continue to like the export-oriented technology players as well as construction companies. We think that the earnings visibility for these players is still very visible. And for that, our top picks within this space includes players like Inari, Globetronics for the technology players. Within the construction space, we continue to like Gamuda as well as Muhibbah. Beyond that, we think that going to the fourth quarter, you see that the market has rallied over the past month or so. Fundamentals hasn't changed by that much, and a lot of that rally has been down to expectations that the US Fed funds rate will be, the hike in the US Fed fund rate will be delayed. Also expectations that there will be more monetary stimulus to be announced, notably by ECB. So on that score, I think if you look at where the market is trading right now, it's trading at about 15.2 times PE. It's fairly valued. Okay, so we remain to be quite cautious in that respect. But we think that in the fourth quarter there may be some buying support for big caps. Okay, given that the governments have recently made announcements of.
So you're seeing more upside here.
Not necessarily for the entire market, but I think selectively, investors could positions to look at, some beaten down big cap stocks that can get some buying support. There will be a 20 billion injections to.
But that's not going to be that much in the big scheme of things.
Like I said, certain beaten down stocks, okay, like banks, we continue to like them. I think among the big caps, this is one of the stocks that have seen quite a bit of sell down compared to the other big caps. We like the likes of Public Bank, Hong Leong Bank. Okay, another big cap that we like was Tenaga. I think these will continue to get some buying supports.
Now, you also raised some interesting points that you mentioned the Fed, you mentioned what the ECB is doing. Also, after Budget 2016 was announced, you see China moving. So how much do you think these Budget 2016 measures will offset the risks or the impacts that we're seeing from the global factors? Is it enough?
I think Malaysia is facing a very difficult period right now. I think a lot of the market forces, okay, likely to be determined by what's going on at the global front rather than domestically.
Okay.
Yeah, we saw how the ringgit then reacted because we were hoping for a bit more of a rally given what we saw on Friday, but China ultimately weighing in on that conversation. Thank you so much, Bernard, for your insights today. Looking forward to having you back on the show soon. That was Bernard Ching, Head of Research at Alliance DBS.